So let's finish the profitability mode by taking a very quick example. As we said, India is a very big economy, and in India, there's a huge business of a gold loan financing. Essentially, companies take your gold and give you loan in respect of that gold or against that gold. So there are two big companies in India when it comes to gold loans. Number one is Muthoot Finance, and the other one is Mannapuram Finance Limited. Now both of these companies are into now both of these companies are into two categories. Number one is gold loan business, and the other one is unsecured loans business. Let's look at their financial statements very briefly to understand what kind of moat do any of these companies enjoy. Here's a very quick rundown of what their income is being shown. Now understand, these companies are essentially run like banks. So this is not your typical manufacturing company. So their income statements will be looked at a little differently. How? So Muthoot Finance has the interest income. This interest income is nothing but their revenue. This interest income in case of Muthoot is around 25,000 crores, almost $4 billion. And in case of Mannapuram Finance is 15,000 crores. So Muthoot Finance has a higher market share than Mannapuram Finance. The cost of sales in case of companies like banks will be the amount of debt or the amount of deposits these companies have taken. So the cost of deposits for Muthoot Finance is around 9,400 crores, and in case of Mannapuram Finance it's 5,000 crores. And the gross profits of Muthoot Finance is around 62%, and in fact Mannapuram Finance enjoys a higher gross margin than Muthoot Finance. Now comes the kicker. The bad debts of Muthoot Finance is 5 to 77 crores. Now these bad debts are essentially straight losses in their balance sheets. So what is happening to Muthoot Finance? Muthoot Finance has given a huge amount of loans, and on those amount of loans, Muthoot Finance is charging interest income. That is around 25,000 crores. Of this 25,000 crores, they will not gonna receive 577 crores, which is part of debts which have gone bad. That is, these people are not gonna pay any kind of money back to Muthoot. So this will be reduced from the profit. And in case of Mannapuram, that is almost 3 times the figure of Muthoot Finance, despite Mannapuram Finance having a much lower interest income than Muthoot. Now why is that? Why is this thing happening? Number one, that is the first question. And the second question, look at the net profit margin. Even though Muthoot Finance and Mannapuram Finance have the same gross profit margin, in fact Muthoot has a lower profit margin. Muthoot has a lower gross profit margin. But the net profit margin of Muthoot is almost double of Mannapuram Finance. So what is happening here? Now to understand this, first we have to go to the income statement and really understand how the books are being managed. Now since it's a brief video, I will just tell you, Muthoot Finance, like I said, is the biggest gold loan financial company in the world. Forget about India. Even with a lower gross profit margin, it has a much higher net profit margin. Why? Because Muthoot Finance has cornered almost the entire gold loan market in India, which is a very high interest margin, extremely safe portfolio market. Essentially, you are giving loans against gold, and gold is highly liquid. Because Muthoot Finance has cornered almost the entire gold loan market, Mannapuram has a lot less share of gold loan market, and they have to suffer bad debts because the second loans which Mannapuram is giving is unsecured loans, and unsecured loans by nature are unsecured, and the loans quality lowers. And since the loans quality is bad, it is resulting in a higher bad debts, and it is lowering their profit margins. So Muthoot Moat is a strong market share of gold loan market, and that forces its competitors to go for more risky unsecured non-gold lending, which leads to higher bad debts as well as higher expenses, because Mannapuram is still trying to add spend, or basically trying to spend more than Muthoot to get more customers in the doors.